How are you everybody? Currently it is gold USD as you can see, and we had a single trade over here that has given us a 1 to 3, which is against my plan, but I've taken something off, and I will be telling you how I did manage this trade and how I did get it below here, but then towards this high, and how we did trade today. So this trade was placed on Wednesday, but the TP was hit on Thursday. Today, as you can see, around 8:45 or 9 a.m. That's when 8:45. That's when we hit our TP. But before then, I think we can talk about it. What did we see and what did print out? So if we can start from the weekly time frame, this is the weekly time frame, and over here what I'm seeing is we had the market been consolidating around this level, and this was last week's candle, and what I did, I realized it was a bearish engulfing candle. And you can go check out the previous video. I think I was talking on how I was expecting the market to drop to this fair value gap, which didn't really happen, and I decided the price action was telling me that somehow we are expecting higher prices, which we can see we pushed higher, and I'm expecting still maybe gold to be pushing higher to even 2600, but let's talk what happened around this area. So from the weekly time frame, what I saw is we have this weekly fair value gap, from which I wanted to see a retracement into that, from which then I wanted to see a retracement going higher to these highs, because if you can go to the monthly time frame, what the monthly time frame was doing is we did create an immediate rebalance, then we were rejecting going higher. Same to this candle, we did create an immediate rebalance over here, where this previous candle's high was overlapping with this previous candle, with these candles low, they overlap, then we had that push higher. So same to these situations, and the all-time highs were at this previous month's high. You can see happy image there. So that's what I was targeting, because we were having this nice rejection. So that's what I was targeting off. Also, the monthly high, this previous monthly high happens to be a weekly fair value area. And what I mean by a weekly fair value area, where we have a 3 price leg pattern, whereby we have one, we had buy side being offered to this high, then we had a drop, we have price leg number 2, and then we had the third price leg that pushed above this high. So this qualifies to be a fair value area, and if you need to learn more about this, go back to my YouTube channel, and I have a given video talking about the fair value areas. So we had this fair value area being formed. The market rallied back into these fair value area, as you can see, created a fair value gap, then we did reject going higher. With this rejection going higher, it was a sweet spot that somehow we cannot expect a retracement into this area, because we were reacting off a fair value area, and you can see we had a nice rejection. But the next week we have been having consolidation. This candle rally lower, never tapped into that fair value gap, but you can see the retracements after reacting off the fair value area. So on the weekly time frame, I had the weekly fair value gap marked up, as well as this previous week's low. They were overlapping, so there was no need of having a previous week's low, as well as I marked up the previous week's high, which was also in close proximity to the previous month's high, which were to attract the market going lower. So with that, then I drop onto the daily time frame, and from the daily time frame, want us to check on what the price action was showing me that led me to be no longer bearish but bullish. So from this area, we swept the previous, this was I think Wednesday last week, we swept the previous candles low, then we did reject higher. So with this rejection, it was somehow maybe a retracement into the OTE before we retrace lower. Then on Thursday, we pushed higher, and somehow disrespected this fair value gap. But on Friday last week, during the NFP, the market cleared the previous candles high, and then we dropped lower. Monday pushed higher, and from Monday, that's where I watched on Tuesday also, and I saw that for real the market from the lower time frame, which was a daily time frame, 4-hour time frame, that somehow we were no longer bearish but bullish with price action, with what price action was doing over here. On Wednesday, yesterday we did consolidate, but today we pushed really higher towards these sides, towards these drawn liquidities. But before that, let's see how did we get to analyze that. So from the 4-hour time frame, we had price pushing around Monday. We had price pushing, and I have been bearish. I wanted to see price deliver to this weekly fair value gap, which didn't really happen. And which levels made me to change my bias to bullish and no longer bearish. That's what I want us to identify. So we had this 4-hour fair value area from this candle's low to this candle's high. And remember, a fair value area, we usually determine that from the higher time frame. And from an intermediate term low, if you go to the 1-hour time frame, you find this intermediate is an intermediate term low, but the 4-hour time frame is telling us this is a short term low, and also this is a short term high inside the 4-hour time frame. But if you drop to the 1-hour time frame, you will find this is an intermediate term high. And what we mean by intermediate term highs is whenever we have whenever we have an intermediate term low, we have a higher low onto the left, right, and also onto the left. We have this low, this swing low that is higher compared to this. Also, we have this low, that swing low that is higher compared to this. Same to this. We have a high that is lower compared to this, and also we have this high compared to that is lower compared to that. So this qualified this to be a fair value area. And remember, the fair value area, we want to see a tap into the fair value area, then reject lower. So with this fair value gap that was paired into this area, what I wanted to see this 4-hour, I wanted to see a tap into this 4-hour fair value gap, then maybe reject going lower with formation of bearish fair value gaps. But that didn't really happen because we didn't create fair value gaps going lower. But what happened later on Tuesday is that the market formed bullish candles rallying higher, and the market rallied deeper into this fair value area. When the market rally or price rallies deeper into a fair value area, then we usually anticipate to see the high of the fair value area being taken. We created relative equal highs as of yesterday. We dropped lower into the 4-hour fair value gap, and I think this was during the CPI. Then we started pushing higher. Let me check out. So for that, we started pushing higher, and from this area, that's where we really got our trade set up. Also today, as we were trading higher, we had these fair value gaps that were created inside the 4-hour time frame. Seeing this fair value gap being respected and the market creating immediate rebalance, and we also pushed going higher. So the market rallied higher, but already our TPs were hit. And these trades that I had, I will be taking you through them. So what did happen over here is the market was reacting off these 4-hour fair value gap. We were sweeping liquidity. We had this fair value gap as well as we were creating other fair value gaps. So dropping lower into possibly the 15 minutes time frame. What did happen is as the market was pushing, I gave it was a 5 minutes time frame. We were creating our fair value gaps. So we were creating these fair value gaps. So for the first trade I did, it was a loser. It ended up as a loser because I was triggered out. I did enter off this fair value gap. We had a fair value gap over there. I just immediately that candle closed, I did enter, but the market reversed on me and my SL was hit. But then another opportunity presented. My entry was based off a one minute entry, and then the market pushed higher, creating fair value gaps that gave me confidence that we are going higher. As we are going higher inside the 1-hour time frame, as the market was pushing higher, what happened is we were forming fair value gaps. So this fair value gap over here As the market was pushing higher, the market was forming these fair value gaps, and around this fair value gap, we also had that 30 minutes fair value gap, which was my last line of defense because I've taken something off at around this area, but also I had trailed my stop loss to this, I think, to this candle slow. You can see I have this line. That's why I trailed my stop loss, ensuring that if the market reverses on me, then I will not be having much of the risk. So that happened. I had this fair value gap as my last line of defense. Then we reacted into that, rejected off, again reacted into it, rejected off, and the market started pushing, going higher. So as of today, we had this 4-hour fair value gap. So as I was watching this price action today, what was happening is price had already retraced higher. We had fair value gaps. We had created these liquidities. So below the liquidities, we had a 4-hour fair value gap. So we had two concepts that I did apply over here that made me to stick with my plan, because we had took out some stop loss, because with this bullish price movement and with this push going higher, I know some people who are able to enter maybe could have entered a buy at around this area and then had their stop losses below here. So immediately we had their trade, the market reversed, cleared their stop losses and tapped into that 4-hour fair value gap. So this is the 4-hour fair value gap. We tapped into these 4-hour fair value gap as well as this order block. Then we pushed toward the direction with only the one candle creating now the all-time highs. So that's how I did react with price. And as of today, I didn't really look into another opportunity. I think I was to take a trade at around these 4-hour immediate rebalance, but I think price action at around that level was so rapid that I never really got to get involved. So the market rallied lower. Immediately we created that 4-hour immediate rebalance. Then we started pushing, going higher, which, because we were also in the all-time highs, I didn't want to get involved in anything since we don't have a clear direction. So that's how I did interpret gold, but we had a 123.7. This one was a loser. We had also yesterday, we triggered, this was on Tuesday, we were not triggered into that, but it was also a nice push. For this, we did lose on Monday, but I think towards the end of the week, I think we've got something. So after seeing that price had already rallied to our direction, now I changed the pair because we don't have a clear direction to be targeting now. And because of that, I decided to shift from gold to Euro USD, because I was observing Euro USD was more cleaner as compared to GBP USD. So over here from the weekly time frame of Euro USD, what I'm seeing is we were having these weekly fair value gap. We're having this weekly fair value gap. If I can get rid of this. So we had that weekly fair value gap, and we have these weekly candles high, so which will be our long-term target going higher if we will be bullish. So after identifying, we had this fair value gap over there, and from the monthly time frame, we really looked somehow bullish, because we can see we have some manipulation of these candle, and the weekly also was somehow showing some rejections of that weekly fair value gap. So I dropped further onto the daily time frame, and from the daily time frame, what I saw is we had the weekly fair value gap. We had those lows that had been cleared, which also happens to be our fair value area. And inside this, around this fair value area, because we have price leg number 1, 2, and 3, so this qualifies to be a fair value area. And you can see over here, as of yesterday, we did clear the previous candle's high tapped into that fair value area, and somehow we rejected, but we were inside a key level. So after notifying that, and I marked up the previous day's high and also the previous day's low, so that I might read in between the price action. So I dropped further into the 4-hour time frame, and the 4-hour time frame to me was showing we had a sweep of liquidity. We had created another 4-hour bearish fair value area, price level number 1, 2, and 3. So we had this as our fair value area, and this candle had already tapped into the fair value area, dropped, but we never really rallied lower, creating fair value gaps. If the market had shown a sense that we were to be bearish, then we wanted to see an expansion going lower, leading to formation of fair value gaps. An example of this price leg over here, we have fair value gaps that has been formed, and that's what we could have wanted to see, because we could have already reacted off this fair value area. So a drop lower, we expected to have some fair value gaps. But after the sweep, we saw the price was somehow consolidating inside this weekly fair value area, and somehow price was showing a bullishness at around 5 a.m. This 4-hour candle that opened at around 5 a.m. had respected this weekly fair value gap, and you can see how the bodies are telling us the story. You can see we have the bodies closing above the midpoint of that weekly fair value gap. After identifying that, and also I had these 4-hour immediate rebalance, I wanted to see price drop, create an immediate rebalance before the push, but that really didn't happen. But even though we had this sign that the market was rallying, targeting the fair value areas high, because we had retraced into this fair value area, yet we had reacted off that. So if price returns into a fair value area, then we always should target the opposing liquidity. So after that, I dropped into the lower time frame, the 1-hour time frame, the same 4-hour fair value gap. We had the same 4-hour immediate rebalance. We had a 1-hour fair value gap, from which I wanted to see a drop into that level before a push. But later on, inside this price action, I got involved, targeting the highs, which the move you can see was such a rapid move to our TP, which will be shown inside the lower time frame. So from the lower time frame, the same. We didn't really have a fair value gap from the 30 minutes. We had only this consolidation, from which I decided to get involved, and finally the TP was hit. So this was the initial trade, whereby we had our buy limit at around these 4-hour immediate rebalance, as well as a 1-hour fair value gap. We were never triggered. This wasn't really triggered, but the market rallied higher. And as the market around this area was showing signs of being bullish, but not intending to tap into these 4-hour immediate rebalance as well as 1-hour fair value gap, I decided to jump in off a fair value gap. We can go back. So we were having this push going higher. So as this push was being created, I did enter off that fair value gap. So I waited for price to drop, because I was anticipating a drop, either to see a sweep, then continue higher, but I decided to take the trade off that fair value gap. Then we dropped further into this area, didn't clear the low, then we started pushing higher, and finally the TP was hit, as you can see. But the initial trade, this one wasn't really there. I should even be closing the buy limit, because I have it still intact in my MT, but that was it, and was a good read of price, and finally can see we did manage to get out with something. So that's how Euro USD printed out, so bullish, and I chose a Euro as compared to GBP. Let's see which is the strongest. So you can see, though Euro GBP is also pushing higher, you can see Euro is more stronger compared to the GBP. So there's also a way we can use to choose of the two pairs, but with time, I guess we get to interact and possibly see what will be happening. So that's what happened today. Hopefully, as of tomorrow, I am expecting have we already seen the expansion? We don't know, but hopefully as of tomorrow, we'll see what will be happening. So that was it for today, and until next time, guys, be safe, everybody.